we are, of course, discussing upfront with markets. Markets seem to have paired. Some of the losses they made in the morning rebounded, ended on green, Suyash.
Yes, Shweta. So after opening almost half a percentage point lower, Indian market witnessed a smart rally and rebounded amid a buying interest in index heavyweight stocks like Reliance, HUL and Infosys. Now at close, Sensex reclaimed the 65,400 levels and was up about 0.14% to close at 65,415 levels. Now it touched an intraday high of 65,517 and an intraday low of 64,821. Now the 50 share Nifty on the other hand closed flat at 19,434 levels above its long time support of 19,300. Now the index touched an intraday high of 19,465 and an intraday low of 19,257. Now the small cap and the mid cap index on the other hand were underperformers in today's session. The majority of the gains were seen in the small cap space, which was down about 0.73%, and the mid cap space also ended lower about 0.17% at 37,770 levels.
All right, so let's quickly get in our guest, Gaurang Shah, Senior VP, Geojit Financial Services, into this conversation. Gaurang, thanks very much for taking time out. I want to understand what's happening in the markets today.
Well, Shweta, I think our view on the markets for the last fortnight is that we are in a brief period of consolidation, and that consolidation zone, if you will, on the Nifty spot is somewhere around 19,300 or thereabouts on the lower side, where we've been twice, once this morning and earlier, I think about a fortnight back, we went and visited those levels. And on the higher side, 19,500 to 19,600 is the zone where you will start feeling a little bit of top heavy feeling. Short to medium term, you might see traders coming and wanting to book out. And more or less, I think from the highs that we saw of 19,991.85 a couple of weeks back to these levels where we saw this morning sub 19,300, the correction of approximately 3.5% if I stand to be corrected. And if my calculation is going right. So, we are possibly in a consolidation zone, and I think it is good that we are spending this time in this consolidation zone. It basically gives an opportunity to the market to make a strong base, wherein in the next move upwards in the future, it will be easy to withstand those higher levels that we'll be visiting. And the market has a history, Shweta. Whenever we've gone and touched a new all-time high, market's tendency and nature is to consolidate for some time.
So, Gaurang, the rebound that we saw, was it a technical pullback or was there a fundamental trigger?
I think short term, there is anything fundamentally that has changed for the market. In fact, the fact that long term, and not to forget, after seeing a rally, again, I stand to be corrected if my numbers and my memory serves me right. I think on 30th of June, we were at, 19,000? Correct me if I'm wrong. And in the month of July, you saw a rally which gave you an up move close to about 1,000 points. Almost we were there, but we missed it out by about 8 points. So after seeing this kind of a rally of almost about 990 odd points, I think you should not complain about some period of consolidation. I think it is just a brief consolidation in an otherwise long-term bull market.
Fair enough. My question then would be, even as that run-up in the month of July happened, many called the markets quote-unquote overheated and said that there was an imminent correction just around the corner. Can we look at what's happened over the last couple of weeks as the beginning of that correction, considering certain pain points are going to continue? The interest rate scenario, high inflation both in India and the US, those issues will continue to affect sentiment for the foreseeable future.
So I will call this as a short-term turbulence, Krishnakumar, in an otherwise very stable flight to safety and an upward move. Inflation is high, there is no doubt about it. And we discussed it in our earlier program as well, that vegetables, certain food grains are creating a short-term turbulence in the market, wherein there is a little bit of uncomfortable feeling. Interest rates, I think we have to bless ourselves that we are in the third time we are in a pause with respect to the credit policy. I'm not too worried about what happens in the US or UK or otherwise, because they have got a different set of problem to handle and they're at a very different kind of a situation than what we are in. So we are much better placed in the governor's own word last week. we are in a much better place and a much better position to deal with situation in case if there is something untoward has to happen, Krishna Kumar. I think earning season was something that the market was looking forward to. There is curtain downs over there. So, my sense is that these interest rates and inflations are just some short-term speed breakers or turbulences in an otherwise a very positive market.
Gaurang, you seem to be really optimistic because from the reading of what the governor said, he said appears that inflation is going to be a pain point in the upcoming months ahead. El Nino could be one of the reasons why headline inflation continues to be above what the RBI and the government was expecting, has been revised upward to 5.4% from 5.1%. You seem very upbeat that inflation will be tamed.
Well, Shweta, if you really go to see in the last 3-4 days, tomato prices have come down from I think 160 to maybe about 120 or 80 rupees. So, these kind of, and I think it is only prudent on the MPC committee, monetary policy committee or governor's part to be a little bit cautious and then possibly make statements. My sense is that if you're not looking at next 3 to 6 months, I'm talking about the stock market and the index or the Sensex or the Nifty where they are. If you have a longish time horizon, I think there are enough opportunities that are there where you can possibly go and nibble into the market. We are seeing some signs of easing off. I think once we have a little bit of more stability, and I think what the kind of havoc the rain is creating in certain parts of India, I hope that is not very detrimental, and I hope there is no such serious damage to the food crop that was standing. Some of it might have got washed out. There is no doubt about it, the kind of rainfall that we've had. But provided that we have a stable situation, and if numbers don't inch up, which I'm hoping that it doesn't inch up, then I think we should be in a much more better situation.
Right, Gaurang, the intention behind me asking that question is very simple. For those waiting to time their entry to the markets, there's never a good time to enter the markets. Even those out there who are buying mutual funds, blue chip mutual funds, or SIPs over there, they say if they're looking for a good window, and if you're hoping for a dip in the future as a good window to sort of reinvest or add to your investments or add to your portfolio, is that dip coming? Are we going to go any lower than where we've gone in the last couple of weeks? Are you looking at a little bit more downside in the coming weeks?
Krishnakumar, after 2008, I learned one thing, that there is nothing called impossible in the market, because when a developed economy like US could have such a huge problem and have a cascading effect on the equity markets across the globe, I think anything, and in equity markets, anything and everything is possible. I'm not saying that whatever 3.5% correction that we've seen is it. There is a possibility, and our markets or any markets are exposed to all kind of internal and external risk. Now, if there is some geopolitical situation, if there is a natural calamity, if there is a dangerous threat to the crude oil supply pipelines across the globe, there might be a little bit of more pain in the market. No denying about that. But whether we are capable of overcoming that, which I am quite sure we are. So this correction that we've seen, and to answer your question, I think if you are waiting in the sideline, then at least take a plunge of 25-30% of whatever capital you want to invest, whether it is either direct equity or whether you want to go in for a blue chip mutual fund or a balance fund or whatever be it, or if you have a little bit of elevated risk appetite, go into the small cap and the mid caps of the world. But just go ahead and make that initial plunge. I'm not saying go all guns out and put all your money at one time. Market has given you an opportunity. I think you should encash upon that opportunity.
The opportunity, there is an opportunity, a great window there for that matter for those planning to enter market. Gaurang, we would have loved to continue this discussion, but unfortunately I'm going to have to cut this short. Thanks very much for joining with your insights.